Could you legally wipe out thousands of dollars in taxes this year, not by cheating, not by hiding money offshore, but by simply knowing the rules better than your neighbor does? Because right now, millions of Americans are overpaying the IRS every single year, and the painful irony is that the tax code was literally written with legal escape hatches built right in. We're talking about a system where a billionaire can pay a lower effective tax rate than a school teacher. And it's not fraud, it's strategy. The catalyst here isn't some new loophole. It's the gap between what the tax code allows and what most people actually claim. Think of the tax code like a buffet, where you pay the full price at the door, but most people only grab a bread roll and go sit down. The people saving tens of thousands are the ones who actually walked the whole line: depreciation, deductions, deferrals, and entity structure, all sitting right there, untouched. A few years ago, during the pandemic stimulus era, everyone suddenly became a finance expert. Crypto wallets, Robinhood accounts, side hustles everywhere. But almost none of those newly minted entrepreneurs set up the right business structure, tracked expenses properly, or separated personal and business finances. And now they're paying for that optimism in April. The psychological weight of tax season is real people either panic file and miss deductions, or they avoid the whole thing until it becomes a crisis. Experts like Tom Wheelwright, Robert Kiyosaki's own tax advisor, have been saying for years that the rich don't avoid taxes by earning less. They invest in what the government wants to incentivize, and the tax code rewards them for it. History is actually pretty consistent here. Every major tax reform cycle, from the Reagan cuts in 1986 to the Trump Tax Cuts and Jobs Act in 2017, reshuffled who benefits and who gets left behind. The people who studied those changes in advance repositioned their assets, their businesses, and their real estate holdings before the window closed. One of the biggest misconceptions is that tax strategy is only for the ultra-wealthy, when in reality, a W-2 employee with a side business, a rental property, or a self-directed retirement account has access to tools that can dramatically reduce their taxable income. The tax code isn't hiding this from you. It's just written in a language most people never bother to learn. Real estate, for example, is probably the single most tax-advantaged asset class available to ordinary people. Cost segregation, bonus depreciation, and the ability to offset active income with passive losses are all perfectly legal and devastatingly effective. A real estate investor in the right structure can show the IRS a loss on paper while their net worth is quietly climbing every single month. The actionable lesson from every tax cycle in modern history is this: structure first, then invest. Because putting money into the right vehicle matters more than the amount you put in. A health savings account, a solo 401k, a real estate professional status election, these aren't exotic instruments. They're mainstream tools being ignored at massive personal cost. Discipline here doesn't mean being aggressive or risky. It means being consistent, documenting everything, working with professionals who specialize in proactive tax planning rather than just filing what happened last year. The process of reviewing your tax position quarterly rather than annually in a panic is genuinely one of the highest return habits a person can build. And look, there's a delicious absurdity in the fact that the IRS publishes the very rules that allow you to reduce what you owe them. The government essentially wrote a manual on how to pay less to the government. The people calling tax strategy a loophole are often just the ones who haven't read far enough into the document. Philosophically, money you keep is money that compounds, and the difference between someone who saves $30,000 in taxes over a decade versus someone who didn't isn't luck, it's preparation. Sizing your tax strategy correctly, staying consistent with your entity structure, and revisiting your plan as your income grows will always outperform a single clever move made in desperation. You don't need to fear an audit if your documentation is clean, your deductions are legitimate, and you're working with someone who knows the difference between a gray area and a solid foundation. Comfort with any tax outcome comes from rational preparation, not from hoping the IRS doesn't notice. Whether you're a W-2 employee with a side hustle, a landlord with 2 units, or someone just starting to build wealth, the strategies exist right now to meaningfully reduce what you owe legally, ethically, and sometimes dramatically. The only variable is whether you act before the tax year closes or write another check you didn't have to write. If any of this has you thinking about your own tax position, your real estate portfolio, or how to structure your next investment, we can help you get started, whether that's real estate investing, home contracting work, or finding the right lenders. So check out our links in the description below.